Welcome everyone to this discussion on reporting crypto taxes in the UK. We've got a lot to cover, from capital gains to income tax and even some VAT nuances.
Absolutely, it's such a dense area. So where do we start? Perhaps with the basics of crypto tax obligations?
Right, the key point is that cryptocurrency isn't treated as just another digital asset. Depending on your activity, whether it's selling, staking, or mining, you can face capital gains tax, income tax, and sometimes even VAT or inheritance tax.
Mm. Got it. So essentially what you do with your crypto determines what type of tax applies. How does capital gains tax factor into this?
When you sell or otherwise dispose of your crypto, any profit you make is subject to capital gains tax. For instance, only the profit is taxed, not the whole amount you sold it for, and it's calculated after subtracting allowances.
Yeah, I see. And those allowances change over time, right? I recall something about the UK reducing the annual exempt amount in recent years.
Exactly. For example, in the 2023-2024 tax year, the tax-free allowance was 6,000, but for 2024 so 2025, it's dropping to $3,000. So if you've made a gain above that threshold, you'll be taxed on the excess.
That makes sense. And what about income tax? It sounds like it comes into play when you earn crypto through mining or staking.
Right. Crypto earned as income, say from mining or even as rewards, is taxed as ordinary income. So if you're in the basic rate band, like if you're self-employed and your total income is around 50Ks, you'd be looking at about a 20% tax rate on that crypto income.
Interesting. So essentially, these taxes are very dependent on how you interact with crypto. But I've heard that record keeping can be a real pain. What's the guidance on that?
Oh, absolutely. Careful record keeping is a must. The HMRC expects you to maintain detailed logs with information like the transaction date, type, and value in pounds. Whether you're selling or swapping, every move needs to be tracked precisely.
Right. That sounds like a lot of work. I mean, if you have dozens of transactions a day, manually recording each one can be overwhelming.
Indeed, which is why many investors use specialized software that can pull in data via APIs or CSV imports. It's like having an assistant to keep track of every little detail so you don't miss a beat when filing your taxes.
That definitely seems more efficient. But for someone who's not tech savvy, are there any simpler options?
Well, if you're not self-employed, the reporting is a bit simpler since you only need to focus on capital gains or losses from crypto sales. But then there's the SA100 and SA108 forms, which you have to fill out. The SA100 is for your overall income, and SA108 is specifically for reporting your capital gains.
I understand that. How exactly do you go about filling these forms for crypto transactions?
So for the SA100, you declare any crypto income in box 17, and then the expenses in box 18. You provide a brief explanation of your income source in box 21, something like, received 200 DOT tokens as a gift, for instance. And if some gains or losses crop up, you mark those in box 7, and then switch over to the SA108 for all the nitty-gritty details.
And in the SA108, what kind of details are we talking about?
That's where you report the number of crypto disposals, the total sale proceeds, and of course your allowable costs. For example, you'd list your total gains before deducting losses, then the losses incurred, and any carry forward losses from previous years. Essentially, it breaks down your crypto activity into the exact numbers HMRC needs.
That sounds pretty comprehensive. Does this guide cover any other areas like VAT implications?
Yes, it does. When you use crypto to buy goods or services, you don't pay VAT on the crypto itself. Instead, VAT applies to the product or service you're purchasing. So if you buy a fridge using, say, Polkadot, you'll pay VAT on the fridge at 20%, not on the Polkadot.
Right? That's an interesting nuance. I also read something about a CJEU ruling that affects VAT on crypto exchanges. Can you shed any light on that?
Sure. The Court of Justice of the European Union established that when you exchange cryptocurrencies for traditional currency, it's generally exempt from VAT. This ruling, known as the Hedquist ruling, still holds in the UK despite Brexit, at least for transactions before the Brexit transition period ended.
Yeah, so switching gears a bit, What if someone isn't self-employed? What's the process for those investors?
For non-self-employed individuals, you register using the SA1 form. Once registered, HMRC sends you a unique taxpayer reference, typically within 10 days if you're in the UK. Then you create an online HMRC account with that UTR and sign up for self-assessment. The entire process is about getting you on board so you can file your SA100 and SA108 forms on time.
And the deadlines are pretty strict, aren't they? Remind me again?
Yes, they are. For online filings, your SA100 must be submitted by midnight on January 31st, 2025. If you're dealing with paper returns, the deadline was October 31st, 2024. These deadlines are crucial because missing them can result in heavy penalties.
Speaking of penalties, what happens if someone fails to report their crypto gains properly?
Oh, it's no joke. HMRC can impose a 20% capital gains charge plus interest, and fines can go as high as 200% of the tax owed. And in extreme cases, there could be criminal charges, even imprisonment. So it's really essential to be meticulous in your reporting.
Right? That's extremely serious. I imagine keeping accurate records plays a huge role in avoiding those penalties, huh?
Definitely, maintaining detailed documentation is your best defense. Every transaction, be it buying, selling, or swapping, needs a clear record with the pound value, the date, and the nature of the transaction.
I'm curious though, isn't it challenging to track every single crypto move, especially for heavy traders?
It is, and that's where the reliance on technology comes in. Now, some folks argue that manual record keeping might lead to errors, and I respectfully say that while tech tools can help, they aren't foolproof either. It's really about combining software with manual checks to ensure everything's correct.
Yeah, I see your point. What about the specific case of staking? I recall hearing that it's no longer considered a collective investment scheme in the UK.
Ah, yes, that's an interesting development. Under the Financial Services and Markets Act 2000 order coming into force on January 31, 2025, staking is explicitly not classified as a collective investment scheme. This removes some regulatory uncertainty and clearly defines how crypto staking should be treated tax-wise.
That certainly helps investors have a clearer view. And how does this guide address inheritance tax on crypto assets?
It mentions that if an individual's estate is worth over $325,000, crypto assets can be subject to inheritance tax. The tax is based on the market value in pounds at the time of death. However, there are reliefs available, like exemptions when assets are inherited by a spouse or donated to charity, that can reduce the liability.
So, in summary, investors need to be very diligent about recording every crypto transaction, understanding which tax category their activity falls into, and of course, filing the correct forms on time.
Exactly, it's a complex environment where every detail counts. The guide walks through calculating gains, determining losses, and the interplay between, income tax and capital gains tax.
And it all circles back to the need for detailed records. Without those, even the most straightforward calculations could slip through the cracks.
Right, and if you don't keep proper records, you're not just risking fines, you're potentially inviting, a lot of legal trouble with HMRC. The guide really drives home the importance of taking crypto tax obligations seriously.
That's a solid reminder. I also find it intriguing that HMRC is tightening its grip with data sharing agreements with major exchanges. It seems like there's really no hiding your crypto transactions.
Absolutely. The notion that crypto is completely anonymous is a myth. The HMRC has access to critical details through data sharing and will soon even receive automated information from exchanges through the OECD initiative.
Yeah, so anyone thinking crypto might fly under the radar in terms of tax is in for a reality check.
Exactly. The blockchain is a public ledger, meaning every transaction is recorded and can be traced back. So transparency is the norm, not the exception.
Summing up, we're looking at a world where every crypto move is scrutinized, whether it's through capital gains, income tax, VAT, or even inheritance tax.
Yes, and while this can make things seem overwhelming, knowing the step-by-step process, using the proper forms, keeping detailed records, and leveraging available technology can definitely streamline the process and prevent any nasty surprises.
For sure. It really highlights that being informed and prepared is key, and that understanding these rules can help investors, from novices to veterans, navigate the complexities more smoothly.
Well put. It's like having a detailed map when you're in uncharted territory. The clearer the guidelines, the better equipped you are to handle tax time with confidence.
Right. This has been really insightful. Thanks for breaking down this complex subject into manageable pieces. It's a reminder that diligent record keeping and a firm grasp on the rules can make all the difference with crypto taxes in the UK.
Absolutely. Thanks for the engaging chat. Remember, folks, when it comes to crypto and taxes, always be prepared and keep your records crystal clear. Until next time.